Imagine stepping onto the floor of a bustling stock exchange, where traders shout and screens flicker with prices. Entering a trading market, whether stocks, Forex, commodities, or crypto, requires understanding a defined set of entry rules. These rules guide when and how to open a position, aiming to maximize returns and protect capital. The first rule is always about timing. Most entry strategies rely on technical or fundamental signals. Technical traders watch for chart patterns, a breakout above resistance, a moving average cross, or a sudden spike in volume. Fundamental traders wait for news, like earnings reports or interest rate announcements, that could push prices sharply. Without a signal, seasoned traders stay on the sidelines. The second rule involves order type. Market orders buy or sell immediately at the current price, suited for fast-moving situations but risking slippage. Limit orders specify a price, ensuring you only enter if conditions match your strategy. Stop orders trigger when price hits a set level, catching momentum or protecting against rapid moves. Choosing the right order type is essential to avoid costly errors. Risk management is the third rule. Before entering, successful traders set their maximum risk, how much capital to expose, where to place stop losses, and how big a position to take. Without this discipline, wins can turn into losses quickly. Entry isn't just about opportunity. It's about protecting yourself if the market turns against you. The fourth rule is confirmation. Most traders look for multiple signals before entering: a bullish candle pattern, volume spike, plus a positive economic report. The more factors align, the stronger the confidence in the trade. Finally, reviewing entry conditions should be routine. Markets evolve, and entry rules may need adjustment in volatile or trending times. Backtesting, running your entry strategy over historical data, helps refine these rules before risking real money. No single set of entry rules fits all traders. Beginners may rely on simple moving averages, while experts use complex algorithms. The common thread? Discipline, repeatability, and adapting as markets change. Successful trading markets entry means knowing your rules, sticking to them, and staying nimble when opportunity knocks.